Like most small business owners, you're probably intimidated by the thought of taxes. You think that only billionaires and the 1% can afford to even think about tax strategy, but I'm here to tell you that that's not true. In this video, I'm going to show you 3 tax strategies and deduction used by billionaires that you can use yourself. I'm here to spill the tea and open up the gate so that you can create the next dynasty. As a disclaimer, this information is for general and educational purposes only. If you have questions about your specific tax situation, please reach out to a tax professional or accountant near you. Please do not put identifying information or personal information in the comment section. Hey there, small business owners. Are you feeling lost when it comes to taxes? Don't worry, you're not alone. I've talked to several newbie and aspiring entrepreneurs over the past week, and most of them said that the number one thing that they struggle with is taxes and bookkeeping. In fact, one person even told me they are considering shuttering their doors and going back to a 9 to 5 because the stress of tax season was getting to them. It does not have to be this way. At Small Biz University, we want to take you from overwhelmed to empowered, so I'm here to break everything down for you in a way that's easy for you to understand. And the sad thing is that the 1% in big businesses don't want you to know how simple and affordable taking care of your own taxes can be. They want you to struggle because that is what keeps you in a state of complacency with being a cog in the industrial American wheel. In this video, I'm going to break down 3 tax strategies that lower your tax, put money back into your pocket, and allow you to build a business that makes the social impact you want to see in the world. So stay tuned. The first billionaire tax strategy I'd like to discuss with you is setting your children up with generational wealth. Did you know that your small business can pay your children up to the standard deduction amount, which is currently $12,950 in 2023, deduct those wages from your business, and that your child will owe 0 tax? What's even better is that if this is your child's only source of income, they will owe absolutely 0 taxes. On top of that, until the child reaches 18, if you are the sole owner of the business or own the business with your spouse, and the business is not a corporation, there are no payroll like FICA, Medicare, Social Security taxes that will need to be paid. There's no age minimum, but your child must actually be doing the work, and you must be paying them a fair wage for the work that they do. What this means is you can't just pay your child $12,950 simply for existing with no work, nor can you pay them $12,950 for taking the garbage out one time from your office. And if you have several children, you can see how this can really add up to big tax savings. This also helps your child develop key skills that will help them in their own entrepreneurial journey in the future. And that's really, I think, the biggest benefit. It's not always about the money. It is and isn't, but building generational wealth has to do a lot with creating opportunities for your children to integrate with other business owners and create connections that open doors for them in the future. What the 1% billionaires don't want you to realize about this tax strategy is that you can use these wages to help your child build generational wealth. Since the income is earned, it can be contributed to a Roth IRA. So you put money in, there's no tax paid, it's after tax, and no tax is owed when you draw it out, and so that money grows tax-free. So your child could conceptually start working for you at birth as a child model in your business and have 18 years of contributions to their retirement account before they're even out of high school. And giving your children a leg up is a big thing that the 1% billionaires do that is more accessible to you than you think. Liking the strategy so far? I want every one of you to live your richest dream. So be sure to click the link below to get my free guide to starting your small business. I also send out totally free information that tells you what you need to know about financially optimizing and scaling your small business. Now, we're going to move on to the next tax strategy that a lot of wealthy people use. The average car payment in America is currently $716 according to Experian. Many aspiring and newbie business owners don't realize that there are tax advantages out there that can help them write off the entire cost of their vehicle used for business purchases in the year that they purchase it. And this would be using Section 179 plus bonus depreciation. Imagine owing no tax on your small business income because you are able to write off the entire cost of the new Tahoe or Suburban you bought for your small business. Now, there is a caveat. This has to be used for your small business. And if you're using it for both personal and business, it needs to be used more than 50% for your business. And in the event that you are using it personally, the deduction will be limited so that you're not getting a tax benefit for the personal portion of that. And the IRS really looks at this, so you're going to have to keep really good mileage logs. I would check out an app or keep a little notebook in your car where you write down the start and end miles whenever you take a trip, and write down if it was for business or personal. You have to keep good records, or the whole deduction can be thrown out in the event of an audit. And also, the vehicle has to be over 6,000 pounds. You can't write off that Tesla you've been eyeing. It has to be a heavy vehicle. Billionaires in the 1% know about tax deduction like these naturally because they have wealth advisors and people around them. And now you do too. And you can consider this tax strategy to save money on your small business. How open-minded are you? The 1% really do not want you to know about the final tax strategy I'm going to share with you. Okay, so be open-minded. The final billionaire tax strategy the 1% use that small business owners like you can consider is by borrowing against their assets in order to expand their business. The way the tax code is set up, you only have to pay tax on income. Your asset appreciation is not taxed until you've sold that asset and realized that gain. So let's use a 401k as an example. If you were to cash in your 401k plan in order to start a small business, you would owe tax and possibly penalties depending on your age for that withdrawal. The plan administrator would hold out 25% for taxes and another 10% for penalties. And then if your tax rate, your marginal tax rate at the end of the year is higher than 25%, you could owe even more when you file your return. So that's easily $35,000 out of $100,000 withdrawal that you would never see. That's very expensive capital. Instead, if your plan allowed it, you can borrow against your plan balance. You would get the full $100,000 and make periodic payments plus interest to repay the loan. The best part is that the interest that you're paying is being paid back to yourself, and that debt does not show up on your credit report. Now, there is some discussion, and depending on your situation, using the 401k might not be the best option because those assets would not be in the market. And so you could conceptually lose off on some market gains. But as you pay back, then your money goes back into the market. That's just a relatable illustration because I know many of you may have 401k plans. The 1% do similar things with other assets, such as their real estate holdings or even their securities, such as stocks and bonds. And of course, I know this goes against conventional personal finance wisdom, but that's just because it's part of the machine that has been created to hold you back and make you feel stuck in your dead-end jobs. And of course, discernment is required. You need to be strategic with any borrowed money, and it must be paid back or you could lose your investment or other assets. If you cannot afford to lose your investment or assets, then don't borrow against them. But if you borrow against them to increase your business and you've discussed it with your financial advisor and it makes sense, that's a lot better than getting you know, like a credit card or something like that. And also, going back to the 401k example, if you defaulted on the 401k loan, or like you left your employer before it was paid back and you couldn't pay it back within the cure period, a cure period is the period of time that you have after you leave the plan to pay back the balance and the loan due. Um, you'll get tax paperwork in the mail and you'll owe tax and penalty on the portion that had not been paid back yet. But defaulting on this loan won't leave a negative mark on your credit report. So if you're worried about that type of thing, that's good. So we've gone over a lot, and you can see now that by leveraging your assets, hiring your children to help with your small business, and finding tax deductions like the Section 179 deduction to write off things you need for your business, you're going to make great strides to living like the 1%, and you're going to do a lot of great things to create generational wealth. And there are two types of people in this world: those who watch others living their best life while sitting on the sidelines and believing that they don't deserve or they are incapable of crafting the life of their dreams, and those who take full responsibility for their futures and watch what others are doing that is working and find ways to make it apply to their situation. I love proving the first type wrong, and I absolutely adore working with the second type of person as well. Be sure to grab my guide below, which will break down step by step what you need to do to start your small business. And I also have an amazing course where I break down how to go from overwhelmed to honing in on your financial vision and empower you to make the impact that is your birthright. So I look forward to talking to you about more of these topics in the future.